Welcome to Bears in Exile. Today is Monday, January 30th, and this is the market overview. Looking at everything we look at every night and having a good time doing it. All right. So today was, what a day today was. It started off with all kinds of promise, and it all just evaporated. Just away it went. And we ended up today with a hanging man. I mean, the body is so darn small. But regardless, almost 7 points down. Absolutely nothing really to speak of. And it's really dangerous because we had this downtick on Friday, and I should have made a video for that, and I didn't. But anyways, we had this downtick, and gave us a target. Target was met today, and by a really decent margin. But you know, it's at those points where you have the bubble corrective moves. It's the movement afterwards that determines whether or not you're going in for a bar retest or not. And so now that the bubble corrective move is completed, we have to look at this and say, okay, does this look like it's going down for a bar retest? If it had closed at the lows or near the lows of the day, yeah, that'd be pretty darn simple. That'd be going in for a bar retest, but it didn't. It ended up way the heck up here. Yeah, we're below the real body of the previous day, but we haven't exceeded the bottom here or closed below the bottom here, and it would have been so much easier if that had been the case, and it just isn't. 14-day RSI moving average ticking up still. Yeah, the stochastics are on their way down, along with the RSI, the CCI, the bearish cross on the MACD histogram ticking down. We have plenty of indications here saying that, yeah, it should go lower. But look what happened when it did go lower. It just got bought back up. So certainly, warning sign. But perhaps, since this is lower than all these previous ones, we'll finally get something that's decent to the downside. But simply put, today is just not impressive from the bearish perspective. Yeah, it's just all there is to it. SPX down 3 points, just over, ending with a hanging man. And same thing. Bubble corrective move, met its target and exceeded it, backed away from it. So we don't have any real tells here about it going in for a bar retest. Same thing with the secondaries, and the 14-day RSI moving average is still ticking up. That needs to stop, it needs to hook, and we just don't have it. Just don't. The VIX, yep, it opened up high. We had a uptick today. The uptick target was met intraday, closed below it. Not impressive. However, we do have the 14-day RSI moving average ticking up, along with everything else. So it does have those going in its favor. But the news is a fickle thing, and certainly there is a bullish bias as they need to get Obama reelected. So, TNA, yeah, this one was all over the place. Low of 53.65, a high of 55.55, and ending right in the middle, giving us a little doji star. Doesn't have a big enough body for a spinning top, but essentially the same thing. Gave us a down tick today, which was not met intraday, just shy of 53. So that's cool. Would be nice to see this one turn around and do a bar retest, but we just don't know yet. 14-day RSI moving average still ticking up, stochastic still high, everything going down, but that 14-day very stubborn. Just not too much to say. We need more data, and but at least we have a downtick target. That's something. That's more than the Dow. That's more than the SPX. It's more than the VIX. So hey. 4 days to accomplish. So by the end of the week, hopefully, we'll get a reading of sub 53 at some point. Moving right along. UUP. Yep, nice big gap up. We do not have an uptick. And this one is really surprising that it is not catching more flack here in this congestion zone of long-term moving averages. It is not sucking itself back into the bar very well, which is a definite warning sign. We can see that in the 14-day RSI moving average still ticking down and everything hanging out low. But really, it should suck itself back in. It attempted to do that today, or at least start trying to do that today, and failed. So we do have excessive separation in the short-term moving averages, which is to be expected when you move through a bar. And so there is a bubble here. FXE, the euro. Yeah. Despite all of the trouble that's going on in Euroland, it gapped down, but it was positive most of the day. We did get a downtick on the euro, giving us a target of just above 129.6, and that's not too shabby. That's not bad at all. It wouldn't be difficult. Long-term bearish bar, still very strong, and we do have excessive separation in the short-term moving averages. There is a bubble here. Now this one, we still have the 14-day pointing up, and but all the secondaries are high. They're attempting to roll over, and we need to see that happen. So be great to see this ejected from the bar, but it is still a little bit early. We almost have a spinning top today, but regardless, it's that downtick that I think is more important. This one is definitely at the mercy of the news. So hold on to your hats. XOY, yeah, that sounds good. Nice move down, and was down on the day when the market was weak, and climbed back up, ending strong. Partially explaining the movement in the markets today, but it is doing what it should be doing, which is it fell down, it ran into the bar bounced it out. This is good, this is healthy, this is what's supposed to happen. Ending with a hammer. Does that mean that it's going to bounce off of the bar and continue on its merry way? Could be. Could be. We need more data. And and this is exactly what you're supposed to see with a downtick, a bubble corrective move. You get a downtick, you finish the bubble corrective move, and then from that point, you see which direction it goes. In this case, it started going down, and so that's good. That's exactly what's supposed to happen, and it's not supposed to meet it and then go back up and then look bullish, which is exactly what down SPX are doing, which is why it definitely gives me pause. What else do we have to look at? How about the NASDAQ? We normally do not look at the NASDAQ, but hey, NASDAQ certainly seems to be helping the market do its thing, especially with our friend Apple. Leading the way, we have a fat body spinning top today. We have a little bit of wobble in the short-term moving averages. We have a little bit of excessive separation, but overall, this looks pretty darn healthy to me. You do have all the secondaries attempting to roll over, with the exception of the 14-day RSI moving average. And so are we going to get a downtick and a bubble corrective move and possibly a retest of the bar? It's just too early. It's just too early. GLD. Yep, it is staying on up. Very, very tiny spinning top. We do not have a downtick. We do have excessive separation in the short-term moving averages. We do not have wobble. Notice the stochastics and the 14-day RSI moving average staying very high, just locked right into that upward position. It is that does look very strong to me. Certainly you have the CCI ticking down, and the RSI trying to tick down, and the histogram ticking down, the MACD ticking up, which is mixed, but notice they're all staying in overbought. So lots of strength here. It's not perfect, but certainly. Lots of strength. It would be ideal to see a retest of the bar and a bounce off and then a run. That would be very, very healthy, especially as the bar finishes its flip to bullish. So I'll be watching for that. SLV silver, exact same thing. We don't have a downtick. We have a doji star, not a spinning top. And exactly the same thing, locking itself into the upright position. Okay, what about how about something else? How about financials? We were talking about how run of financials equals good rally. So what are they doing? Well, we have the 200-day moving average, and it's coming back in for a test, ending with a hammer. Slight move down, but not really anything dramatic. Secondaries all trying to go lower. 14-day RSI moving average leveling out, but still pointing up. And so not neutral going sideways yet or a rollover, but not as dramatic as the Dow or the SPX. And I guess the telling sign on this will be the 200-day moving average. If it's able to break that, certainly that'll be a huge warning sign and probably stop the rally in its tracks. But until it does, you have to give the benefit of the doubt to the bulls. Absolutely. You can see we had a downtick a few days ago. We had a downtick on Friday. Those have both been resolved. The question at this point is, does it continue down or does it just start going up again? And the 200-day will play into that. And maybe one more for the road. GE, try to get a better handle on the Dow. You can see that we did have a downtick. It was met today. Ending today with a hammer. We're waiting to see if this can continue on its way down and test the bar, or if it's just going to finish that move and attempt a new high, new recent high. Stochastics are mixed. CCI is ticking down, RSI is ticking down, histogram's ticking down, MACD is ticking down. Oops, got those reversed. I always seem to do that. 14-day RSI moving average, flat in this whole little area, but pointing down. So it would be nice to see that take over and start to move, but until it does, we're just stuck waiting. And certainly could reverse course if everything decides to turn around, and then it is going to make a new recent high. And there it is. Waiting game. Oh yeah, waiting game. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.